Hello, after some break here, I am again with some additional exercise case to value-added tax, and I promise you we will be finished with these exercise cases soon and then go on to a new chapter. Well, but before we pass on to new things, let's have a look to this small exercise case. William Hole is a wholesaler and he is resident in Zweibrücken, which is literally translated two bridges in Germany, so seems to have been a long time ago a rather small village, but not today. Now, William Hole ordered a whole package of second-hand books from a trader, Theo, in Zurich, Switzerland, for a net price of €2,000, and William had to pay the VAT at the customs office, that was €140. He then offered these books online on the platform eBay, and a few months later a customer from the USA ordered one of the books for €100, so William sent it there. Well, let's think about what we can do with that case. Well, the first thing which we should always do when we approach a VAT case is to have a look what really happens here. So who has a contract or a legal relationship with which other party? Theo from Zurich sells something to William Hole in Zweibrücken in Germany. Now that's books and they have a value of 2,000. The second transaction which we can see is that William Hole sells a single book for €100 to a customer in the USA. We don't know if that customer is a private person or an entrepreneur, and we don't need to know probably. Well, let's begin with the beginning, as it's always a good idea. And here you see the movement of the goods during the transactions. In the first transaction, the books go from Zurich to Zweibrücken, and in the second transaction, one single book goes from Zweibrücken to the USA. Let's begin with transaction number one. Well, the first question is, as always, is there any kind of taxability? We will have to test number one USDG as always. So let's have a look. Theo is an entrepreneur, although he is in Switzerland, because entrepreneurship does not depend on your nationality or where your enterprise is located. It's just if you are an entrepreneur. Evidently, who sells some package of books for €2,000 seems to do that on a constant basis, so in a sustainable way. So, yeah, entrepreneurship. Also, that is evidently a book trader, so he acts within his enterprise. For consideration, yes, naturally, because he demands a price. So let's come to the really important questions. Is it a delivery or a service? It's clearly a delivery because a good changes ownership. So we need to have the place of delivery. The basic rule for a good which is moved during the transaction is 3.6 sentence 1, where the movement of that good towards the customer begins. That is in Zurich, that's in Switzerland. However, if the good in question comes from a third country to the inland, there is a special rule. In 3.8, we have to test this too if it entails a deviation from the basic rule. 3.8 applies if the good in question during a delivery crosses the border from a third country into the inland. That is fulfilled here. And if the importation VAT additionally is paid by the deliverer or somebody acting on his behalf. That's not fulfilled here because the case information clearly states that the customer, Mr. Hole here, pays the VAT. So 3.8 does not apply. If a special rule does not apply, the general rule still applies. So 3.6 is what counts. The place of delivery remains at Zurich. Zurich is not in the German inland. So transaction number one is surprise, surprise and happiness, not taxable in Germany. So we can go on to transaction number 2 and check this. Transaction number 2, taxability. Again, we have to check number 1. William is an entrepreneur, that seems to be clear. He acts within his trade. Book selling by a bookseller for consideration, yes, naturally. It's a delivery because a book is a tangible good, and here ownership changes, or better, the position like an owner changes. So everything now centers around the place of delivery. That is the basic rule 3.6. And let us permit an initial remark. The rule about the electronic marketplace involvement does not become relevant here because this has only to do with goods which come into the EU and not with goods which are sent from the EU to other and third countries. So it's simply 3.6 which counts. That means where the transportation of the good begins towards the customer, that's Zweibrücken, that's in the inland, so that's taxable transaction. Do we have an exemption? Yes. At least we have to check if it is an expert. That was defined by paragraph 6 in the German law. And you remember there has to be a distinction to be made. 6.1 number 1 is if the entrepreneur himself sends the good abroad. 6.1 number 2 is if the customer does this. We have the simple case of number 1. And number 1 says every time or always if an entrepreneur himself or his employee or his subcontractor or who else on his behalf sends the good abroad and crosses the border with the good, then this is always accepted as a tax-free exportation if the necessary documentation is available. So here that is an export, and that an export is free of VAT can be found in paragraph 4 number 1 letter A. For your tax declaration form, you probably still need to fill in the net amount. That is everything which is paid minus the VAT, which is included in that amount. And this is easy. Everything which is paid is here 100 euro. There is no VAT included because the amount is tax-free, as we have just seen. So 100 euro gross amount is identical to 100 euro net amount. We have nothing to say concerning tax rate, taxpayer, tax arisal, and no peculiarities which might ruin the case. For example, a wrong invoice confirming too high a VAT, which entails a tax liability of the person who wrote the invoice. All that is blah blah not present here. So we end up with the last remark, which always should be remembered. Does the transaction have any consequences on the input tax claims of the people involved? The customer in the US, that's simple, has no VAT input tax claim at all because his delivery, which he got, was free of VAT, so there can be no VAT which could be claimed back. So the only reasonable person on whom we could have a look here is William Holt himself, the wholesaler. And in spite of the fact that this output here is tax exempt, as always with exports, the input tax claim for the raw material or the own purchases made by William is upheld. It's not cancelled. Exports, are free of tax, but do not kill the right to input tax, in contrast to every other tax-free output. Okay, and that was already everything and enough. So I wrote here, by the way, that here no such input taxes can be seen. Well, there is one. The importation VAT, which was originally paid on that single book when it came across the Swiss border, was naturally related to that output. But according to the data which we have here, we can't find out exactly how high that importation VAT had been. So that said, we have reached the end of our small case. So let's Yeah, let's end here and wait for the next things which are soon to come. Thanks for watching, goodbye, and hope to see you again soon.